Given its better control of the virus, China has become the only major economy to achieve positive GDP growth this year. So, what's your outlook for China's economy in 2021?
So I continue to expect exports and manufacturing to be strong in China for the first half of the year. And so in the second half of this year, I expect China's economy to then see a greater contribution of the economy from things like consumption and services.
You are optimistic about the Chinese stocks market.
That's right. Certainly we're not going to see the types of price movements in Chinese stocks that we saw over the past 6 months. But I still think that there is still some meaningful upside in Chinese stocks.
Some strategists in Wall Street say there could be a near-term double dip for the US economy.
And I think that the worst is yet to come. I think that the next month or two will be very pivotal in the US.
Hello, David. Great to have you here today.
Sure, great.
Okay, let's start with the big picture. The COVID-19 pandemic has a great impact to the global economy. People are now hoping that vaccine can help the world get out of shadow. But as we enter 2021, the second wave of pandemic remains on the upswing. What's your outlook for the global economy in 2021?
Great. And thank you very much for having me. And being in Los Angeles right now, it is the epicenter of the pandemic. And so it is kind of a jarring place to be, as most businesses have shut down, including restaurants and cafes, bars, stores, things like that. And so we would have never imagined that a year from now that many parts of the world continue to experience accelerated levels of the COVID-19. Now, that being said, I'm still very optimistic about 2021, and I think that this is going to be a very good year. My optimism is based on a few things, primarily on a successful vaccine rollout, as well as accommodative monetary policies from central banks around the world, as well as the prospects of improving US-China relations. And so all of this will be supportive of a global economic recovery that should also lead to stock market gains from many parts of the world.
What would be the downside risk?
Sure. I think that the biggest downside risk continues to be the COVID-19, especially in places like the US, the UK, and Europe, because there continues to be uncertainty about new strains of the virus mutations, and whether this means additional business shutdowns and lockdowns that will have greater economic impact. I think for now, many governments are still pinning their hopes of a successful vaccine rollout. However, the vaccine rollout is not going as smoothly as previously anticipated. For example, in the US, only a portion of the vaccines that were set to be distributed in last year in 2020 were actually distributed. And that's because of either the difficulties in vaccine distribution, the logistics of it, or even down to simple questions as to who gets the vaccine first, or do people need the actual 2 doses versus the 1 single dose for some of the vaccines. So I think that some of these issues continue to be to continue to hamper some of the economic growth that we expected to see starting at the end of last year. Coupled with this new strain of coronavirus, we are monitoring the situation very closely, since we may potentially see another double dip in the economy in places like the US and the UK and in Europe.
Across the globe, countries have enacted significant fiscal spending programs, and major central banks have provided even greater monetary policy to support the economy in 2020. What could be the change in 2021?
I think that in 2020, most major economies decided to enact both significant fiscal stimulus, and so we'd call them bazookas. And so these bazookas were fired off multiple times from Japan to the UK to China to the US, and this was the right course of action in order to prevent businesses from shutting down and from really from giving financial support to those that were affected by COVID-19. While the pandemic continues to rampage unabated in places like the US and UK and parts of Europe, I expect additional fiscal stimulus measures to be rolled out in 2021 in perhaps the first quarter or the second quarter of this year. But I think that the vaccine rollout will be successful and that governments will take a wait and see approach in 2021 on fiscal stimulus measures in the second half of the year. And so I think that there is still some additional fiscal stimulus left around the major economies in the world. Now, what's also important is that we will see liquidity being pumped into the system through central banks around the world keeping interest rates low. And I think that initiative and that effort will continue to be a buffer and for risk asset prices.
The dramatic uptick in money supply caused concerns about inflation. Do you think inflation could be a problem in 2021?
I think that it depends on which economy that we look at. And so from my perspective, I think that the PBOC is perhaps the only central bank that may tighten policy in 2021 compared to the other central banks around the world. And that's because China has done a very good job containing the COVID-19 to begin with. And so already its economy has seen significant rebound in activity. And because of that, the PBOC is in an enviable position that it could tighten some of their monetary policies. And already we're seeing that in terms of certain actions, for example, the leverage ratio for developers in China being tempered down. And also some of the inflationary pressures, for example, the recent the CPI in China having ticked up because some of the food prices coming back to order. So that's one of the economies. So China is one of the economies where I see that inflationary pressures could come back perhaps in the second half of the year.
Do you think yuan will continue to go strong against the US dollar this year?
So I think that it's the US dollar that is expected to weaken against a basket of currencies, including the yuan. And there's a few reasons for that, because the US dollar is overvalued.
Given its better control of the virus, China has become the only major economy to achieve positive GDP growth this year, as you predict before. So what's your outlook for China's economy in 2021? IMF said they had a forecast of about 7.9% growth this year. Is this in line with your views?
Sure. I think that China will be one of the only economies that will benefit from two important growth variables for the year. So the first growth propeller that China will experience will be continued acceleration in manufacturing and trade in the first half of this year. And that's because the pandemic continues to ravage many parts of the world, like in Europe and the UK and in the US. And this is actually going to continue to drive manufacturing growth in China, because these economies will continue to order healthcare products, electronics from China, and also from many of the export-oriented economies in Asia. And manufacturing is very important for China. It's around 40% of the GDP. And it also employs a significant number of people in China. And so I continue to expect exports and manufacturing to be strong in China for the first half of the year. Now, the second half of the year is also important because that's when the vaccines will really start to have an impact. So as vaccine roll out, we expect a large percentage of people around the world, especially in the US and Europe, to be vaccinated starting in the second and third quarter. The majority of people in these countries will be vaccinated by July 1st of this year. And so because of that, that should drive further consumption, and consumption should drive services. And so in the second half of this year, I expect China's economy to then see a greater contribution of the economy from things like consumption and services. So these are two important propellers for the Chinese economy for this year.
You said that 2021 may be a great year for emerging market stocks. So I guess you are optimistic about the Chinese stocks market, right?
That's right. Certainly, we're not going to see the types of price movements in Chinese stocks that we saw over the past 6 months. But I still think that there is still some meaningful upside in Chinese stocks over the next year. And that's because we continue to have a very favorable environment, as I mentioned earlier, in terms of both because of the pandemic being assuaged by the vaccine rollout, because of more favorable geopolitical environment and a more favorable trading environment on a global stage. So all of these dynamics should contribute to a much more friendly and much more palatable market for stocks.
Okay, so what about the Hong Kong stocks market? Some strategists said this market is undervalued.
That's right. I think that Hong Kong stocks are undervalued. In fact, they're one of the cheapest stocks out there when you compare them to both their APAC. I think that only the Karachi Stock Exchange has a lower PE multiple than the Hong Kong stocks. And especially when you compare Hong Kong stocks to OECD countries, the Hong Kong stocks are the cheapest. Now, I think that for investors that have they will take this opportunity to scoop up some of the significant bargains that exist there. And we're seeing that a lot of Chinese investors exercise that through the north-southbound connect. And so many Chinese investors snapping up some stocks in China, especially those Chinese mainland companies that are listed on the Hong Kong stock market, and they trade at a meaningful discount compared to their mainland peers that are listed on the mainland stock market. And so I think that this is a arbitrage opportunity that is very attractive. We'll continue to see the Hong Kong stock market and Hong Kong as a place for financing, for capital raising, especially for Chinese companies. I think that this is the bread and butter for the Hong Kong economy, and I think that the importance for Hong Kong's role will continue to grow over the next few years.
Do you think yuan will continue to go strong against the US dollar this year?
That's a good question. I think that the more important component of that question is, will the US dollar weaken? And so I don't think it's necessarily the yuan strengthening, but I think that it's the US dollar that is expected to weaken against a basket of currencies, including the yuan. And there's a few reasons for that, because the US dollar is overvalued, and there are also structural reasons why the US dollar should weaken. So although we're currently seeing the US dollar strengthen over the past few days, I think that's just a blip. I think that we will, longer term, over the course of the year, we'll see the US dollar weaken meaningfully against the yuan, against the basket of currencies. especially as we continue to see additional fiscal stimulus measures being touted. Since now there's a blue sweep. The Senate seats were recently won in Georgia state during a runoff. So the US Senate, the US House of Representatives, and the White House are now controlled by Democrats. What does that mean? That means that there is a much higher likelihood of fiscal stimulus measures, economic aid measures, to be rolled out over the course of this year. And who's going to pay for that? Well, they're not going to increase taxes because the economy is too fragile. And so a lot of that fiscal stimulus measure is just going to be placed on the balance sheet of the US government. And so because of that, that's one of the structural reasons why I think that the US dollar will continue to weaken against the RMB. Now, how much strength can the RMB show over the course of the next year? Well, I think that it settles around this level right now. I think that it could potentially strengthen just a little more against the US dollar. And there's also been recently a raft of measures that have been announced in Beijing about greater flexibility and trading ranges for the RMB in order to encourage investors and also traders and businessmen to utilize the RMB more.
You recently remind that the US stock market is expected to undergo a correction.
I think the correction could be some rotation from growth and technology stocks to more cyclicals. But we could see some softening of US stocks over the near term.
Some strategists in Wall Street say there could be a near-term double dip for the US economy. I remember you mentioned that before. So do you think it's possible?
I think it's very possible that we see a double dip. And the most recent unemployment claims suggest that the US is going to experience a double dip. If you look at the number of new infections and the number of unemployment claims, there is a direct correlation, because the more number of new infections that goes up, the more number of hospitalizations, which leads to states enacting further economic lockdowns, and that leads to businesses shutting down and people being laid off. So I think that we have yet to see some economic softening happen in the US. And I think that the worst is yet to come. I think that the next month or two will be very pivotal in the US, especially in terms of how the pandemic and the associated economic consequences of the pandemic start to feel the way through the system. Now, on the flip side of that, though, is that the vaccines will continue to be rolling out. And over the past couple of months, the rollout has not been successful in terms of being able to reach what the intended quotas and the targets were. But I think that governments, state governments, local governments are better and more experienced and equipped now than they were a couple of months ago in terms of how they want to distribute the vaccine. Every day we're learning a little more about vaccine distribution. And I think that we'll start to see that vaccine have more of an economic impact perhaps in a couple of months.
What would that mean to the market? We know that US stocks had done well since the market lows in March. But you recently remind that the US stock market is expected to undergo a correction.
I don't think that the correction will necessarily entail having any sustained downward movement. I think the correction could be some rotation from growth and technology stocks to more cyclicals. But we could see some softening of US stocks over the near term, especially since the pandemic continues to take on an economic toll. That said, the amount of liquidity, though, in the US that is sitting in money markets is staggering. Over 1.4 trillion US dollars this is excess liquidity that came over last year, and a lot of it came through the fiscal stimulus. And so a lot of people have been saving their money. They haven't been spending it. And so a lot of that money is just sitting there waiting to be deployed. So I think that if there are any kind of meaningful dips in the US market, that a lot of this liquidity will be utilized to kind of buffer any kind of sustained market softness.
Do you think there will be more stimulus package from the Biden government?
The Democrats have previously stated that they wanted up to a $3 trillion fiscal stimulus. And so the most recent agreed upon stimulus was only just under $1 trillion. And so if the Democrats could have it their way, they would size up that fiscal stimulus and turn that check from $600 to $1,200 or even $2,000 a person. So these are just like cash handouts to many American families that need it. And so I think that the odds of another round of fiscal stimulus in the first quarter of this year in the US are quite high. I would say something over 50% chance that we see another round of fiscal stimulus, especially because the pandemic continues to ravage many parts of the country, and many people stand to be impacted over the next couple of months. So I think that with another fiscal stimulus measure coming down the line, that could also provide support for US equities.
What could be the new momentum in 2021?
I think that 2021 will be the year of emerging markets. And there are two asset classes that I like in emerging markets, because already we've seen tremendous price movements in places like Korea, Taiwan, China, Japan, because these have done a very good job in containing the pandemic, and their economies have benefited as they're export oriented. And so these dynamics have really propelled their stock markets forward. Now, if we look at economies that haven't experienced such impacts, it would really be emerging markets. For example, in Southeast Asia and in Africa and Latin America. And I think that with the rollout of the vaccines, these economies benefit disproportionately from a vaccine rollout. And so I think that investors that are looking for interesting opportunities, I think EM ex North Asia is a good place to look. Also on the fixed income side, I think that 2021 for fixed income investors, that they really want to be exposed to EM Asia debt. So EM Asia credit, and especially local currency debt, because I think that EM currencies are going to appreciate against US dollar. Also, EM credit have much more high interest yields. And then on the government debt side, I think that Chinese CGB, the 10-year, continues to have a very juicy spread over 300 basis points, which is a significant spread compared to the US 10-year Treasury. So I think that this is the year for EM ex-Asia equities as well as EM Asia credit.
Okay, thank you. That's all my question today.
And thank you very much for having me.